that they will, I will read, otherwise I will read it. So this question is related to advance tax.
Yeah, okay.
Question number 14, page number 19. So question is, the assessee had a taxable income for financial year 2009-10, where the tax liability is more than 10,000. He did not pay any advance tax as envisaged under the Act. He has paid the tax by self-assessment and filed his return of income. As an assessing officer, while assessing and passing the others, how will you impose the tax? So here he is liable to pay tax of 10,000. But he paid under self-assessment. So when self-assessment and he filed the return. So self-assessment when we make, when we get the form 16 or after 31st March and before 31st June or August, according to the time applicable, we are filed the income tax. So same way here the assessee also filed. So but the assessing officer has intention that because he is liable to pay 10,000. So payment of advance tax is mandatory. So how advance tax is paid? It's assessee he will calculate what is his projected income in a financial year. During the financial year itself, one will project what is his income. So out of that, what is a tax implication that they will see. If any tax deduction of source is already taken place, they will deduct that. If still the payable tax is more than 10,000 in a year, one is liable to pay the advance tax. So advance tax is to be payable in installments every quarter. Even if you miss every quarter, at least by 15th March, you have to deposit the advance tax. So here, assessee has failed to deposit the advance tax. How much advance tax is to be paid? 90% of the total tax liability, one has to pay as the advance tax. So he failed to pay even before 15th March. So then what are the implications? Implication is a penalty at the rate of 1% per month on the due amount. So it is calculated when he is liable to pay the advance tax at least by 15th March. So from that time to till he filed his income, he is liable for the penalty. So here advance tax, remember only 3 points, 10,000 is the minimum tax liability is 10,000. One is liable to pay by at least by 15th March of that financial year. So if failure of this, it will attract penalty at the rate of 1%. So remember these 3-4 points so that you can elaborately write the answer related to advance tax.
Okay.
Then question number 15. The assessee spent sum of 84,000 during the financial year for the medical treatment of his mother aged 62 years suffering from neurological disease. She was treated by the general physician. Explain the tax treatment advice in accordance to the rule regarding exemption. So whether assessee is liable to pay tax in 84,000, that is the question. There is a section 80 DDB is there. This is the tax exemption section where an assessee incurred towards the treatment of specific diseases like neurological diseases, some chronic diseases, then even for cancer treatment, all those things. A certain amount is exempted from the tax. So that is 60,000 is exempted from the tax if it is a normal person. If it is a senior citizen, 1 lakh is exempted. But here one more condition is there. They've given very clearly. She was treated by the general physician. It is not the general physician, that is expert of a doctor. If it is related to neurological, that neurological doctor, she takes the treatment with him. And then exception 60 up to 60,000 it is exempted. So that we need to write. So section 80 DDB we need to remember that. So any expenses incurred towards specified diseases, self, spouse, children, and dependents parents. So here she is a senior citizen, 62 years. So 1 lakh is the allowable expenditure at the max. So this book is old book. I think this provision is not updated as per the latest. So as per the latest, maximum amount expenditure allowable if it is a senior treatment is for senior citizen, it is 1 lakh rupees. So this is completely exempted from the tax. If it is as on today, if the similar question comes 84,000, if it is more than 1 lakh 10,120, if they give, then you write your answer differently. Hope this one is clear. Shall we move to the next one?
Yeah, yes, madam, you can move here.
Question number 16. SSCX purchased iron and manganese ore from local supplier on FOB basis for export to foreign countries. Iron and manganese ore were liable to tax at the last purchase point under AP-GST Act. SSC claimed tax exemption under 5(1) of the CST Act read with Article 286(1)(f). The revenue rejected the claim, assessed the purchase turnover to tax. Defend the SSC. See, one thing is section 5(1) of the central sales tax. We have already discussed. Any sale or purchase related in the course of import or export, that sale or purchase of goods should be deemed to be taken place in the course of export of goods out of the territory of India. Then that entire sale or purchase transaction is exempted from the sales tax. So that is to be explained in this case. Article 286 of the Constitution, I am not clear on that. If I could not explain much on that. But as per the central sales tax, the sale or purchase is for the ultimate export outside India, then that is exempted from the tax. So here the purpose is very clearly it is written export to foreign countries. So this is exempted from CST Act.
So any import export is exempted from CST Act, or specific products are there?
No specific products. Any product, if it is in the course of import and export, because every small vendor cannot register himself for the export. Na?
Okay.
So what they will do, they will sell it to one more person who can do that export. So that if ultimate transaction is for export and immediate previous transaction is exempted from the, it is treated as sale in the course of export only.
Okay, for that no tax is...
no tax, no central sales tax.
Okay.
Next, question number 17. Prepare the pro forma statement of income of the SSC pertaining to his heads of income salary, house property, and long-term capital gains and sale of residential house by correctly applying the following sections. Section 16, 10, 13, 10, 14, 80 DDB, 80 G, 24, 30% statutory deductions, 45 ATA, 48, 54 deductions under chapter 6A, 80C, 80 triple C, etc. TDS and calculate the tax liability. There are no numbers are given. So entirely he is asking entire income tax book. First thing is these kind of questions comes very easily. You have to write. First bifurcate the heads of income. What are all the heads of the income? There are total 5 heads of income. Salary, income from salary, income from house property, income from business or profession, capital gains, income from sale of property, that is the capital gain, and the last one is income from other sources. So here what they are asking, first one is the income from salary. So salary received in the form of basic salary, dearness allowance, HRA, conveyance, entertainment allowance, medical allowance, any form of some perquisites, profits in lieu of salary, whatever we have studied under head salaries, everything is chargeable to tax. That is to be written. If it is to be written about the salaries, that is entire salaries. Then what are all the exemptions? They have here they are discussing about the entertainment tax and professional tax. That is section 16(2) and 16(3). In case of government employee, entertainment allowance up to 5,000 is exempted from the tax. Or actual amount or 1/5 of the salary, whichever is lesser. I think one more question is there on this. So please remember. So this is the exemption. This is applicable only for a government employee. If he is receiving entertainment allowance up to 5,000 or 1/5 of the salary, actual amount incurred, whichever is lesser. Then professional tax also is exempted from the, this is a deduction. Then next is the house property. So whatever is the net annual value we compute on that, 30% standard deduction is available, and the second deduction is the income interest we are paying, whatever we are paying on the housing loan, up to 2 lakhs per annum maximum is deductible from the rent. Net annual rent minus standard deduction, whatever is there, out of that again up to 2 lakhs per annum we can take. So that is about the income from house property. Next is the capital gains tax. So capital gains also, here they didn't explain very much in detail. There are two types of capital gains tax, long-term capital gain and short-term capital gain. If the holding is for more than 36 months, that is a long-term capital gain. So that these provisions is to be written, because here they didn't give any numbers and all. Simply they are asking explain. And then what about chapter 6 ATC deductions under? Up to 1,50,000 per annum, one can claim the deductions under chapter 6A, ATC, ATCCC, etc. So by all these things, we assess the income from each head and we arrive the gross tax liability. Out of that, if any tax deduction at source has happened, you have to deduct the tax deduction at source. From that, whatever is the balance tax, one has to pay. So that you need to explain here, because they have not given any numbers in this question. So with this, I think one first year 2013 is over. Then we will move to.
Madam, actually, I am having some notes. Okay, just click on the sections for these cases alone. I will project that.
Okay.
And I will also project it.
Okay, please.
Yes, can you able to see the screen clearly? Yeah.
But you didn't write anything on the basic income tax act, like.
No, just the sections alone I had kept.
Sections only. House property is the section 24. Then section 16, 17. These are all related to salaries. Please add those also in your list, so that
Section
it will be easy.
16, 17. Okay.
16, 17, 24 and section 54. All those are related to computation of income. Please write those sections.
Okay.
Next is the page number 95. Assessee X, a limited company, manufactured steel product during the previous year 2008-9 and it spent 40,000 on account of traveling of an exporter. The expert suggestion resulted in increase of the output by the company. The assessing officer assessed taxable income of X company, treated 40,000 incurred as capital expenditure not deductible in computing the income of the company decided. See, so this expenditure is related to capital or revenue. If it is capital expenditure, one will capitalize in the books of accounts. So only depreciation is chargeable. But here assessing officer is telling, because of export, your production is increasing. So we are treating it as capital expenditure and it is not allowed as a expenditure. If it is not allowed as expenditure, what will happen? Your income will go up and your tax liability will be more. So what is your response on this? Actually, traveling expenses are in the nature of revenue expenditure. So this cannot be treated as a capital expenditure. So it is a deductible expenditure. And one more thing, this traveling expenses are incurred for official purpose to an employee. So for employee also it is not an income. So it is a deductible expenditure. Some case laws are also given, but I didn't see any question afterwards, similar kind of thing. So it is a deductible expenditure. Traveling expenditure incurred for a business purpose by an employee is a deductible expenditure for the business. Next is page number 96. What is the tax liability of the medical services, including medicines provided to the employees of state government and rent-free quarters for high court judges and their expenditure on traveling? One thing is, if any accommodation provided to the employees by the any of the employer, it will come under the perquisites tax. But there are certain exemptions, like housing accommodation provided to high court judges and all. They are entitled for rent-free accommodation, so they are eligible for this, and they are eligible for traveling expenses also. So it will not come under the perquisite tax. If it is a normal employer, then we need to calculate the perquisite tax. But specific exemption is there for high court judges on providing rent-free accommodation and also on traveling expenses. Then coming to the medical facility. Medical facility provided if the hospital is owned or maintained by the employer, and if it is a state government or central government hospital or local authority hospital, even if it is a private hospital, and if it is a nominated hospital as per the Income Tax Act, then any expenses, medicines or treatment expenditure given to employees is exempted from the tax. Please remember that. Here also they have explained it. Medical facility provided in a hospital owned or maintained by the employer, hospital of the central or state government or local authority, private hospital if it is also recommended by the government for the treatment of government employees. Specified medical facility given in 3A in hospital approved by the Chief Commissioner is not chargeable to tax. That's it. Answer is very simple. But repetitive questions I didn't see on all these things. Mostly questions are repetitive on the computation of the income. So far we have not seen any computation. Let us see in the next question papers. Then page number 97. This is also repetitive question if you see in the previous 2013. The same advanced tax. So please remember provision on advance tax and reply that. If liability is more than 10,000, one has to deposit 90% of the tax liability in advance. Then page number 98. The assessee sold his agricultural land for a sum of 40 lakhs on 1/7/2008. Which was purchased on 22/8/1982 at 5 lakhs rupees. On 15/7/2009, he purchased a house property at Tirupati for 35 lakhs. The assessing officer rejected the claim beside. Actually, there is an exemption in case of sale of long-term capital assets. Like if it is within a specified period of 2 years, one is investing in another house property and all, it is exempted from the tax, that capital gains. So that's why he has asked, assessing officer rejected the claim. So we'll discuss the provisions of the capital gains. Actually, if the capital gain and transfer of land used for the agriculture purpose is exempted from the tax. Then second thing is one has to see that where this agriculture as a land is situated. If it is situated within the municipal limits of any city, then it is not treated as the agriculture land and one is liable to pay the tax. So here it is assumption is taken as the land is situated within 8 kilometers from municipal limits of Tirupati. So this will become a agricultural land is exempted from the capital asset. But here it is assumed that it is within 8 kilometers. So it is a capital asset. and holding period is more than 36 months. So he is liable to pay the tax on long-term capital gain tax. But one thing in case of capital gains, what we have to remember is even in our personal life also, there is a provision indexation. So in the 1982, he has purchased the land for 5 lakhs and today he is selling for 40 lakhs. Straight away, if you see, it will become 35 lakhs, will become a capital gains. But in the income tax provisions, it is not like that. So one has to do the indexation. So indexation numbers will be given in the book. So for maybe they will give it in the question paper. Or here it's already given, I think, in the rule application itself. So it is for 1982, it is 105, and 2008, it is 995. That means whatever you bought for 105, today this is 995. So proportionately, if you bought at 5 lakhs and 1982, what is the present value at 2008? So this is becoming 47 lakh 50,000, and whereas you sold only for 40 lakhs. So what is happening here? It is not the gain, it is the loss. 7 lakh 50,000 is the loss. So what an SSA has the can do is, because it's a loss, he can carry forward this loss for the next 7 assessment years for setting off from the future capital gains. Otherwise, what will happen if he is not carrying forward? He is losing that benefit. See how if it is profit, how we are paying the tax to government. If it is loss, also we should have the provision. So if any loss is there from the capital gains, one can carry forward for the next 7 assessment years. So next year, per se, again, he's selling some other property and he got maybe some 10 lakhs capital gains. So previous year, 7.5 lakhs capital gain capital loss is there. He can set off and he can pay only tax on 2.5 lakhs. So please remember that. Set off, carry forward, set off and carry forward provisions. So he is not liable to pay any tax. So that you need to explain in this question. Okay, sir, clear? We can move to next one.
Yeah, yes, ma'am.
Next is the page number 100. So finally, we came into the calculations. Calculate the taxable income of Mr. Kiran from the following. So he got interest on government security. Let me open one Excel sheet so that it will be easy for you. So just I'm writing salary, house property. So one has to, if such kind of questions anything comes, first is we need to bifurcate the income falling into which category. So first one is interest on government securities. So it is not falling, it is not a salary, it is not the rental, and this is not the business or profession we are carrying out, it is not the sale of assets. So what is left out is income from other sources. Then short-term capital gain, long-term capital gain, 32,000 is there and 5,000 is there. Actually, book is not clear. Here, long-term capital loss 12,000 is written in the question. But last carry forward only 5,000 is there. I think, okay. This is, here I will write 2 more line items. STCG and LTCG. So short-term capital gain is 32,000. In between we missed out income from business 10,000 is there. So this I am writing it here. Then third is short-term capital gain. So please write in this format if any question comes. The long-term capital gain 5,000 is there. Okay. Then long-term capital last 12,000 is there in the 2010 level. But what is the long-term capital gain is available in this financial year? Only 5,000. So set off can be done up to 5,000. So capital gain is 32,000. Income from horse races, where it will fall? So here I am writing in detail interest income. Next, playing cards. All these things, whatever is not fitting into any top 4 will fall and automatically it will come into the income from other sources. Then there is a speculation loss of 13,000. Please remember that if any speculation loss is there, we can set off against the only speculation profit. So in this question, there is no speculation profit. So we cannot deduct this 16, that it is a loss. 13,000 can not be deducted from any other income. So this is 69,500. So we have to leave. So this is the 1,11,500 is the taxable income. Please prepare a table in this format. Taxable income. You please write speculation loss. There is no speculation gain. So speculation loss cannot be set off against any other source of income. Like even one is having a business loss, cannot set off against the income from salary. If you are having negative minus income from house property, there is a topic set off carry forward of losses. Please go through the topic. So 8 assessment years, if it is a capital loss, we can carry up to 8 assessment years. And if any capital gain happens in the future, we can deduct. So similar way, we have given the treatment here. So there is a carry forward capital gain, long-term capital gain loss is there. So we have set off against the long-term capital gain profit. So this way we have arrived the taxable income. Related to speculation loss, one more provision is there. One can carry up to 4 assessment years. So in the footnote, still we can write. In the footnote, people can write speculation loss. There is no speculation gain, so we have not set off. No set off in the current year income tax, and can be carried forward for 4 assessment years. So in the future, if he is having a set speculation gain, that time he can set off the speculation loss incurred in this financial year. Then related to even long-term capital loss also, still he can carry forward whatever is the leftover period. Total 8 assessment years one can carry forward. So they have given 2010-11. If how many years is over, that one can see and write this answer. So this question is in the page number 100. So this is question number 14. Hope it is clear. Please remember this format.
Okay.
No, actually, my question is here. If speculation loss is in the current financial year, in which head has to be included? I'm asking.
That sources only. See, whatever is not fitting into about top 4, everything will go into income from other sources. There should not be any confusion with anyone. If it is you are an employee-employer relationship is there, straight away whatever we are earning will go into salary. If it is related to business, business income. If it is related to rental income, house property. If it is sale of property, then it will go to capital gains. Then what is the left out? Everything will go under the income from other sources. Even if you are not coming across the terminology in your question papers in the whatever is available in this book, if it is straight away you put it in income from other sources. That's it.
Madam Mandan, see one more question on the day when we are discussing. Ani Prasad asked that. Okay, so this is income from other sources, right? For example, horse races and the playing cards and winning lottery. Okay, so lottery is, for example, he has gained, like 1 lakh rupees. Okay, 18% GST tax they will deduct and they will give it to us, right? So it comes around 85 lakhs. Now this 85 lakhs should I show here? And because that
no, what is the deduction?
Deduction is 15%, is 18% they have deducted as GST or whatever.
Whatever proceedings you are receiving on that is your income. So entire income is chargeable to taxes. See, the lottery and all entire 30%. If one is participating in some TV program and Kaun Banega Karodpati, 1 crore or 2 crores, one got the prize money. Where it will go? It will go on sit in income from other sources. Straight away, all these incomes while giving itself, they will deduct the tax and will give the proceedings.
So GST is separate and payment to income tax yearly is separate.
That is what from that is his income.
Okay.
Because if again GST is included, that amount he has not received, na?
So only that
proceedings whatever he's received.
Okay, 88,000 only is.
That is fully chargeable to tax and that is taxable at 30%.
30% means 70,000 is taxable.
Yes, sir. Yes, sir.
Okay.
So there should not be any doubt. It must be clear in our mind. What is not fitting into last top 4 will go and sit in the income from other sources.
Okay.
Like gambling, horse races, playing cards, then speculation income, winning from lottery, winning from TV shows. Even if a sports person like a man of the match, man of the series, some awards they give and say they give some cash prize. So that will also go and sit in income from other sources.
Okay.
Okay. Next is question number 15. A, B, C are partners in ready-made garment factory sharing profits and losses in the proportion of 1:2:1. Why? The profit and loss account of the firm shows like this: rent, office salaries, general expenses, interest, then salary to A, commission to B, net profit. Then they're asking about what is the chargeability of income earned by the 3 partners. So what is chargeable tax to them? So let us see for A. So this is the business income. What and all they earn from because of this business? One is interest on capital.
Yeah. Liability, no?
So we can on the top we can write here it is related to B. So A got 5,000 interest, B got 4,000 interest, and C got 5,000. Then salary to A. A only got the salary. Okay, only the working partner is eligible to get the salary. So here it is assumed that A is the working partner. Okay. So whatever salary earned by A, I'm keeping it in this salary. Commission to B. Similar way, commissioner salary, whoever is the working partner only, they are eligible. And also interest on capital also. See, for business again, they have to compute profits for the business also. No? It is not only the individual's income. Even for that partnership firm also, they have to declare the income. So there is a applicable rules are there, income tax for even partnership business also. So more than 12% is not allowed. So it is assumed that interest on capital is less than 12%. Then what is net profit? Everyone got a share of their profit from the firm. So here share will be always. So what is the net profit they got? They got 38,000. So it is for A it is 9,500. For B it is 2/4. So it is 19,000 for B. And C again it is only 1/4 of the profit. So 9,500. So total income. Huh? So here commission I have taken 5,000. It is only 2,000. So these are all incomes of each and every individual. So please note that salary or commission will come only for the working partners, and interest on capital is also allowable up to 12% in the business. So please remember these 2 points and you compute income in this format. Next question number 16 is it's a theory question. Please go through the set off and carry forward of losses lesson. So that I didn't explain.
Yeah, okay. That is okay.
Please go through the entire lesson. That is more important lesson. Somehow we should have discussed. We missed out. Then come to the page number 104. Explain about the valuation of assets under Wealth Tax Act. So in your textbook, while explaining, they did not explain it this much detailedly, but when they are asking the question, your author has explained it very detailed.
Okay, so it's just theory only. Yeah.
No, it's the theory question only.
No.
Next is page number 106, year 2016. See here also what they asked ultimately, calculate the what is the see, all these tax liabilities and all these numbers are not correct. Whatever is there as per at least you must be in a position to come up to the total tax, or at least taxable income. First step is arrive up to capital, what is chargeable to tax. If you come into that one, and I will share the whatever is the latest applicable tax numbers. So please remember that and calculate accordingly. See, here we got a income from agriculture, income from business, short-term capital gains, other sources. So what I will do, I will take it from the top. So there is no income from salary. There is no income from even house property also. And the business income straight away they have given 1,45,000. And income from capital gains, short-term capital gains is 7 lakhs. Then income from other sources also they have given 1,21,000. Then where agriculture income is going, that also we didn't discuss. Agriculture income is exempt from tax, but it doesn't mean that we should not disclose in the income tax returns. So even though it is exempted from the tax, for the purpose of income tax calculation, we need to show even agricultural income also. So this is the gross total income. See, this also please remember, once we compute, the first step is gross total income. After writing all the 5 heads, this is gross total income. After this, we have to write the deductions. These are all called chapter 60 deductions, like ATC. So 60,000 he has deposited in PPF, and 10,000 on LIC. So entire 70,000 will become under ATC. Even A also 15,000 under section 80. They did not write it clearly. So what I'm taking it, PPF and premium paid and life insurance policy plus the top 15,000 I'm taking at ATC deduction. So 85,000 will come under ATC.
But here only 58,000, no? So that is wrong.
That book is old. I think they have given as per the old. Now up to 1,50,000 is eligible for ATC, na? So I am calculating as per the current provisions. Section 80E is for the higher education. If any loan is taken on higher education, so that is also eligible for tax deduction. One more thing is section B 12,000 under 80L. It is given in the question, but in the answer solving 80I they have given. Let me see what is. I'm not clear whether they are talking about 80L or. But as of now, ATL is not available. Whatever dividend in ATL is related to dividend income we receive from the companies. Earlier, it used to be exempted, but a lot of people are earning income from dividend. So government thought why we should give as an exemption. So now that is also fully chargeable to tax income from other sources. So I am adding as per the current provisions. I am taking it to. So I'm not giving any deduction for 12,000. I'm taking this as a dividend income. So I'm calculating in this way. See, your author has to, if it is a recently published book, they have to reset the figures according to the latest applicable numbers so that it will be easy for you. So for this, we need to add agricultural income of 7 lakhs. So taxable income water 15 lakhs 65,000. We need to calculate what is the tax applicable on this 15 lakh 65,000 less like tax rebate. So tax rebate is whatever is the agricultural income. See,
Why is that
It is
125 plus that of 30% is given?
which one, sir?
No, below that, tax in that book, tax on above, it is given some 1,25,000 plus 5,41 into 30%.
That are old calculations, sir. Now don't consider that.
Okay, that is why I got confused.
Okay, whatever is the current provisions. See here also, now there are 2 types of tax calculations are available. Section 115 AB. So as per that, you won't get any deductions straight away. See here we got ATC deduction. Okay, ATE deductions. There won't be any deduction. Entire amount is charged to tax, but slabs will be at lower rate. That is called new tax regime. If one is having housing loan and one wants to claim the HRA and ATC deductions and all, they can continue in the old regime.
Okay.
So we have to assume that.
Madam,
Tell me, sir.
I have one doubt. Why do you add 7 lakhs in agriculture income?
That is what, sir. Agricultural income is exempted from the tax, and straight away it is not exempted from the tax. This calculation.
Actually, the agricultural income in India is exempted now.
So that is what I am telling. Please listen. See, it is exempted from tax, but you have to declare, and they will calculate the tax with taking agricultural income into account. And here we will get the tax rebate.
I have one more doubt, madam. What is difference between exempted and deduction? Exempted means it is not under the.
No. If you say
it is not come under the tax calculation. Exempted means.
No, sir. Please listen. Agricultural income is exempted from tax, but it is in indirect way. If you see the provisions, please don't believe in your book. Take some taxation book, Taxman, some Singhania book and all. You take, they explain it very clearly. So what we have to do is, in our income computation, we have to take. That's what next step I am going to do here. Tax rebate on 7 lakhs. What is the tax applicable as per the current applicable rate? I have to deduct tax on this 7 lakhs. Indirect way, they are deducting. So here you will calculate the tax applicable on 15 lakhs 65,000. And here tax rebate.
Okay, madam. But exemption and deduction is not same.
Both are different. That way,
exemption means leave it.
Any Singhania book, anything, please don't refer your book. So please go through Singhania big book they sell. Okay.
Right. Right.
Everything they explain in that. So indirectly it is chargeable to tax. That is the way they have written it.
Okay, madam. Okay.
So it will be added into your income and tax is calculated on entire 15,75,000. Then again, indirect way, what they do, you have to reduce your tax, what is applicable on 7 lakhs. So net tax only you need to pay. This you need to deduct on 7 lakhs, what is the tax. So that's why in your book, net rebate, they have taken 7 lakhs into account. Got it? If you see
yes,
page
madam.
number 106. So 7
Yes,
lakhs
madam.
they brought here.
Okay, go ahead.
Actually, I don't have Singhania latest book. Otherwise, I would have taught you with that. Even I am not carrying that book with me.
Yeah, that is okay, madam. That is okay.
And your book is also, when we have discussed about the agricultural income, they did not explain anything in detail. 1 second, sir. In Google, I will tell you give you the exact reference. Just a minute. Sir, I am sharing one screenshot. Not screenshot. Screen sharing, I am doing it. Are you able to see this clear tax screen, sir?
Yes.
Yes, ma'am.
Okay, just the income tax has prescribed rules to make this bifurcation regarding agricultural and non-agricultural. See, if you take different tea and all, only 60% is treated as agricultural income. Same way, rubber is some percent. So different these things is there. Classifications are there. If you go deep into that, so per se, they tell it is exempted from the tax. So please go through this taxation of agricultural income. Agriculture income is exempt from income tax. However, the Income Tax Act has laid down a method to indirectly tax such income. This method or concept may be called the partial integration of agriculture with income with the non-agriculture income. It aims at taxing the non-agricultural income at higher rates of tax. So, per se, we all know that it is exempted from the tax. See, calculation of agricultural income, how it is done. Calculate tax on non-agricultural income plus net agricultural income. So calculate tax on both. Then we need to calculate the rebate, final tax. Rebate, if it is available, then surcharge, all these things. See here, if you see example, income from other sources is 7 lakhs and net agricultural income is 2 lakhs. Calculation of agricultural relief and net taxable payer under the old tax regime is as follows. Total taxes on 9 lakhs is calculated. So it is coming as 92,500. Then total taxes is basic exemption limit plus agricultural income. So 4,50,000 is coming. So on this 10,000 is coming. So net tax is 82,500. Hope your doubt is clear now, sir.
Yeah.
So we all think that it is directly exempted. It is not directly exempted. It is indirectly charged to tax. So here what happens? We'll calculate the taxes applicable as per the latest numbers. Wait. Then we can arrive even that also. So for latest applicable taxes are up to 2,50,000 it is exempted. 2,50,000 to 3 lakhs is 5%. So then how to calculate our tax on 15,65,000? So it is on 50,000, 5%. So we need to bifurcate like this. Up to 2,15,000 nil. So next to 50,000. That means if your income is 3 lakhs, 2,50,000 is exempted, and on this remaining 50,000 it is charged at 5%. Then 3 lakhs 1 rupee to 5 lakhs means next 2 lakhs rupees. Again it is 5%. Okay, total if you see here up to 5 lakhs, if your one is earning a 5 lakhs income, on 2,50,000 this amount of 5% is charged. Then after that 5 to 10 lakhs is means another 5 lakhs. It is 10%. Sorry, 20%. This is old design. What I am writing is then if it is above 10 lakhs, whatever is there, 30%. So now our income is 15,65,000. So first one is 0. Then up to 50,000. It is 5%. So 2,500. On the next 2 lakhs, it is 5%. So up to this, what we have covered? So only 5 lakhs income. So next to 5 lakhs, it is 20%. Then up to this, how much value we have calculated? We have covered 10 lakhs. So what is the left out income? 5 lakhs?
Another 5 lakhs
65,000. Okay. On this, it is
whatever is 30%.
So this is the 2,82,000 is the total tax payable. Next, what happens? Rebate we will calculate. In the rebate, what will happen? This up to 2,50,000, you have only agricultural income, 7 lakhs. Then what happens? Up to 2.5, nothing. So 7 lakhs is our income.
Madam, how that 7 lakh tax rebate came? Have they given it in the question?
No, they have given an income from agriculture.
So, okay, agriculture, they are totally subtracting that.
On that, what is the tax? You have to calculate including the agriculture tax. That is why I have shown you that provision of from one website. Though it is exempted, it is indirectly charged. So please don't be under the false impression that it is fully exempted from the tax. So we got a rebate of 52,500. So ultimately we are liable to pay 2,29,500. And already he paid advance tax. And there is a TDS also, 500 rupees. So we have to deduct 13,000 from this. So net liability is 2,16,500. So agricultural income is chargeable to tax in indirect way.
So agriculture income, they are adding anyways in the income. Okay.
And we are deducting the rebate
rebate
in the form of rebate.
Okay.
Whatever.
But instead of that, okay, they can just subtract it. They can just use that 86,500. Sorry, 8,65,000. And for that 8,65,000, they can calculate all these things, right?
That is what, sir. They are charging indirect way. So what is happening? Here you have 7 lakhs they are including. So you are going into 30% bracket.
Correct.
Have you noticed that? And whereas we are getting the deduction under 20%. So government is at the benefit of 10% because of your agricultural income.
Okay. So 5%, 20% is the okay. Okay.
So because of that, our tax is jumped. But whereas we are calculating the exemption rebate, we are in the 20% slab only.
Okay, so this is indirectly they are charging you
yes.
10%. Yeah.
That's what, sir. Anything you wanted to know detailed, buy one Singhania book, but it is very big one. But they explain every provision in detail.
Okay, got it. For auditors, it might be required, but for lawyers, not required.
That is what, because what I'm noticed in your book now, they're not explaining a lot of provisions in detail, but you are getting the questions in the exam.
Whatever you worked out, the standard things, so we can apply that for all other.
That is what, sir. My intention is at least you must be in a position to write up to this.
Correct.
Like deductions, at least you come up to the taxable income. Your almost 50 to 60% marks are assured for you.
Correct. Okay.
At least up to this, please come. After that, even tax rates also you can remember something you calculate. This also, this portion also. Please remember, these are old resign. Okay, if you want new resign, that also I will give the.
No, this is okay, madam. We can put it in bold one. Okay, we'll pass on to the next one.
So just a moment.
Yeah.
So for your purpose, I'm giving this. What is the difference between old regime and new regime? In old regime, we get some deductions like housing loan interest, then ITC deductions, 1.5 lakhs, HRA exemption, all those things. In new regime, nothing will be there. Only thing is tax slabs are very less. If you see here up to 15 lakhs, only if you cross the 15 lakhs, only 30% is chargeable. Here, if you see in the old regime, if income is more than 10 lakhs, then 30% slab.
So which is better for assessing this case?
Sir, if you have wanted to claim the housing loan, all those things, old regime is better. If you don't have any deductions, new regime is beneficial.
Okay, got it.
Okay. Next is question number 15. Mr. A is a foreign citizen. He submits the particulars of his income for the previous year 11-12. So please remember the word foreign citizen. He is not an Indian. Profit earned on sale of plant in Delhi was 1,02,000. Please remember, if any outside, like if if he's not a citizen of India, whatever income profit earned on assets related to India, it is chargeable to tax in India. So entire 1,02,000 is wherever he received, even if it received in some other country also, because this profit he is earned in India, so it is liable to pay tax here. Profit earned on sale of plant in London was 1,46,000. Out of it, half was received in India. He is a non-resident. He is not a citizen of India. So anything related to foreign country, it is not chargeable to tax in India, even if it is received in India. Agricultural income earned in Australia, he is not a citizen, so not chargeable. Half of the amount was sent to India. Already it might have taxed as per the Australian rules. So even if he is remitting to India also, it is not chargeable to tax in India. Salary of 1 lakh from Indian company in London. Company may be Indian, but he received in London. But if it is related to services rendered in India, again it is chargeable to tax in India. So here he is asking, they are asking if he is a resident, then not ordinary resident, non-resident. If he is a non-resident, then only Indian income is chargeable to tax. If he is a resident, then even foreign incomes also, even if he is a foreign citizen, but he is a resident in India, then whatever income related to India and foreign also, it is chargeable to tax, provided if already tax are remitted in foreign income, and if he is simply remitting to India, that is not chargeable to tax. Otherwise, it will lead to double taxation, like Australian income. If he is a resident, agricultural income in Australia might have got already taxed there. So if he is remitting to India, it is not chargeable to tax. You have to write all those provisions in your answer. Next is discuss the provisions of law relating to appeals and revisions. Please go through it, sir. It's a theoretical question. Then CST also special cases. This is also theory question. Please go through it. Next is page number 111. Following are the particulars of income of Mr. Ashok for the previous year 2017-18. Particulars are in rupees. Rent from property in Chennai received in USA. Less statutory deduction 33.3%. Income from a business in US controlled from Bangalore. Income from business in Coimbatore controlled from Australia. Rent from property in Australia received there but subsequently remitted to India. Interest from deposits with an Indian company received in Australia. Gift received from his parents-in-law 1,50,000. Please remember that related to gift, up to 50,000 any gift received in a financial year is exempted from tax. But gift received from the close family member, maybe like parents, children, and in-laws, exempted from the tax. Here we need to see the they did not explain clearly about the gift. Compute his income for the assessment year 2018-19 if he is resident but not ordinarily resident in India. First is related to rent. So first is, please follow our standard format. Don't go by, you stick to one format. First is house salary income. Whether he has any salary, he don't have any salary, he doesn't have. Then house property. So already they are giving back calculated number only. After the statutory deduction, he got 30,000 house property. So income from house property. I'm writing in short form. House property is 30,000. Straight away they have given in the question. Next is the income from business in USA. We are computing he is a resident but not ordinary resident. So this business is controlled from Bangalore. So income from business or profession. So one is controlled from Bangalore. $1,35,000. Then Coimbatore, because he is a resident. So 2,25,000. So then income from property in Australia, he received to India. That is assumed that already he might have paid the taxes there. So it is not taken into house property income here. Okay. Next is interest from deposits, other sources. Interest 15,000. The gift here, I have a doubt. I'm not clear why he has taken 1,50,000 because the gift of 50,000 in a financial year, gift in the form of cash received is exempted from the tax. If you take in that way, only 1 lakh is chargeable. But gift received from the family member is exempted from the tax. Like even if you are receiving from your mother, father, spouse, children, brother, sister, all those are exempted from the tax. So here I'm taking only 1 lakh because he has taken 1,50,000, but the entire 1,50,000 is not chargeable. It is received from parents in laws. Just a minute, I'll check the latest provision and I'll update. Actually, gift received from the parents in law is not taxable. So entirely it is exempted. I'm taking it as 0. Here you see category of the donor, relative, spouse, brother, sister of self and spouse, brother or sister of parents or parents-in-laws. Individual, when a gift from a defined relative is not taxable for the donee, income from such gifts, if may, in some cases, taxable in the hands of the donor itself. For example, clubbing provisions being owner concept in the house property. Like what happens, recently Narayana Murthy has transferred a lot of shares of Infosys to his grandson. So what happens in the clubbing provisions, though he is received as a gift, it is taxable in the hands of whatever dividend he receives, no? It is chargeable in the hands of Narayanamurthy. So that is what he is telling. But gift amount received is not chargeable to tax in the hands of the recipient. So because of this provision, I am taking that gift received from parents-in-laws, I am taking it as 0. So that way, I am calculating the chargeable amount to tax. So 4,05,000. As per my calculation, it is only 4,05,000. Okay, sir, is it clear?
Yeah, it's clear, madam.
Later, I will share this Excel for
Yeah.
your reference so that you can refer on this. Then page number 1112, question number 15. Naveen has been in the service of a private company since 1st January 2011 in Chennai. During the financial year ending 31/12/2015, he received from the company salary 25,000 per month, DA 5,000 per month, CCA 800 per month, entertainment allowance 1,000 per month, and the HRA 8,000 per month. Naveen resides in the house property owned by his HUA, for which he pays a rent of 6,500 per month. Naveen has been in receipt of entertainment allowance from the company since January 2011. So compute his income under the head salary. See, salary means, please remember this easy format. Basic salary, then dearness allowance, then CCA, then entertainment allowance. Earlier we discussed this question. Entertainment allowance received by the government employee is exempted from the tax, subject to lowest of 3 numbers. But he is working in a, please remember the word private company in the first line itself. So entirely it is chargeable to tax. Then what deduction he will get? HRA exemption. So how much is his basic salary? So 25,000 per month. What is the DA per month? 5,000.
60,000.
Later I will put that. But through formula will calculate it. And HRA of 8,000 he is getting per. So this is his gross salary. Then what is the HRA exemption? One is actual HRA. So it is 96,000. B is rent paid in excess of 10% of salary. So here the rent paid is how much he is paying? 6,500 per month he is paying. What is the 10% of his salary? These two components are his salary. So 10% of his salary is 36,000. Rent paid is 6,500 multiplied by 12 months. So 78,000. So what is the difference between these two? 78 minus 36. So hope this calculation is clear.
Yeah, it's standard only. Yeah.
Okay. C is where he is staying, where he is working. Chennai, we remember Bombay, Delhi, Madras, and Kolkata. So Chennai means 50% of salary. So already we have calculated what is salary. 3,60,000. So 50% is 1,80,000. So what is the least one? 42,000 is the least one. So this is the HRA exemption. So what is the taxable salary? So 4,35,600. Next is question number 16. Ashok acquired a plot of land on 2001 for 6 lakhs, which was sold on 2014 for 35 lakhs. Total expenses and transfer were 70,000. Ashok made the following investment on 6/3/2014 from the proceeds of the above plot. Bonds of National Highway Authority of India, deposit 5 lakhs with a period of 3 years lock-in period. Capital gain scheme for purchase of residential house. He does not own any house, 12 lakhs. So compute the capital gains tax. So this is very, what is the sale consideration? Sale proceeds are 35 lakhs. Indexed cost of acquisition. So for what price he bought? For 6 lakhs. So it is 272 times of this one. So 16 lakhs 32,000 it has become. Then expenses on transfer. What expenses he incurred? So he incurred 70,000. So he can claim 17 lakhs 2,000. So what is the chargeable amount? 17 lakhs 98,000 is taxable income because of sale of this property, plot of land. But what he did, he invested in bonds. So bonds is exempted from tax. So how much he has invested? 5 lakhs he has invested.
5-year tax is exempted from bond, right? But he has taken only for 3 years.
It is 5. One second, sir. What is the latest provision? We will see. Just a moment, sir. I'm checking on the. Sir, your book is wrong. Exemption is available up to 50 lakhs. One can take the capital gain bonds and 50,000. Even National Highway Authority also. One can claim the benefits. Sir.
So even for 3 years also, or 1 year?
Yes, sir. But lock-in period is 3 years, sir.
Yeah.
So if the bonds are redeemed, if you are buying the bonds and immediately you are redeeming, again it is chargeable to tax. So I am taking entire bond value 5 lakhs as the exemption. Then capital gain scheme also entire amount. So entire 17 lakhs I am taking as a so only chargeability is capital gains liable for tax. That's it, sir.
Okay.
See, question number 17 is explaining about the gift. See, Lakshmi draws salary of 25,000 per month. So entire salary is chargeable under the head salaries. Income from other sources. Gifts will fall under the income from other sources. Gift received from best friend is 2 lakhs chargeable. Gift received from fiancé is also chargeable. Gift received during the marriage, if any gifts received in the marriage, that is also exempted from the tax. Even mother's brother also is a close relative as per the definition. So please refer, just go through that. If he's falling the relative in that, it is also exempted. Father's sister is also exempted. Husband's sister also is exempted. So taxable income is calculated in this way. But what is that? Only 50,000 is exempted. That is not taken into calculation. So while if a similar kind of question comes, 50,000 you can take it as just a minute, sir. Need a 2 minutes break. Sir, we have completed 5 years question papers, sir. Thought of completing all these things, but because we are going in depth, like so it didn't go as per this previous.
So rest are all actually only the theory.
Let's do one thing, sir.
Ah,
If any questions you need any help, na, please
Okay.
message to.
yeah,
sir.
yeah, yeah, sure.
So those questions, maybe if you need help, maybe I will make a statement in this Excel form and I will send it, even if the session is not possible also.
Yeah, okay, madam. Okay, actually,
Or if you want, if you literally want session like wanted, please inform. Maybe in 1 hour we can finish it because
sure, madam, sure.
because questions what I'm seeing are a bit different, not
Mm-hmm.
directly repeating. So that's why.
Kamakshi, what she is saying, actually we are going in depth, so we have a one more 1 hour session. So these calculations and everything, it will be cleared in next session. So Sunday, next Sunday 4:30 same. So we'll finish it off these five papers.
What I feel is, Raj, because most of the other things also is similar to the workouts, the same only.
Yeah, almost all same.
Same only. Okay, so if at all any questions are there, I will we will share it through WhatsApp itself, and so that she can help in case if it is not understood or something.
Yeah, definitely. Actually, we need not to go in that depth. So we are not. We are not
No,
a
this,
tax.
see, this Excel workout is very good actually. Okay, so we had covered, and we also know how to write this, statement and other things. We can manage with that. Yeah. So with whatever thing we have.
Actually, if you write these headings, if the related to these
Yes.
questions, if you write these headings in that one, so probably figures will mismatch. That will not a problem. Actually, exact composition may not be done. So we can through that exam, I guess.
Yeah, sure, yeah. This itself is more than enough actually. To create that statement, having that knowledge itself is more than enough.
And actually, she was tired. She was attending morning at 10 o'clock to one session was there till 2 o'clock.
Okay.
And after that one, this one, she was exhausted. Okay. Just if we require, just we can have one more session next Sunday, 1 hour for all the remaining, if required. So any doubts and clarifications, we can clear it out.
Okay, Raj. I will let you know in case if that is required. Okay, so I think this is enough, but in case if it is required, I will let you know for next Sunday. Or otherwise, we will have like a kind of a question and answer session.
Yeah, exactly.
Okay. Thanks.
Thank you.
Yeah. Thank you.
I'll save this Excel sheet and
yeah.
I'll save the Excel sheet and I'll send it.
And you can send it to the WhatsApp itself.
Yeah, definitely.
Okay. Yeah, madam. Thank you so much for your time, patience, and
No problem, sir. No problem. It is useful for you. That's
you also took time to yeah, lot of efforts are going inside. Thank you, madam. Thanks for your efforts.
Okay, sir.
Yeah, definitely. Thank you so much.
Thank you.